Are you tired of being held back by a low credit score? In this video, we'll show you how to take control of your credit and build a solid credit score that will open doors to better loan and credit card rates, lower insurance premiums, and even job opportunities. Our expert tips and strategies are easy to follow and will help you establish a strong credit history and increase your financial stability. Let's get started. Your credit score is a 3-digit number that summarizes your credit worthiness and used by lenders, landlords, and other organizations to assess your financial stability and risk. A good credit score can open the door to better loan and credit card rates, lower insurance premiums, and even job opportunities. On the other hand, a low credit score can make it difficult to borrow money and can even impact your ability to rent an apartment or sign up for certain utilities. That is why it's important to work on building and maintaining a solid credit score. The importance of credit scores. Your credit score is more than just a number. It's a reflection of your financial habits and is used by lenders, landlords, and other organizations to assess your credit worthiness and risk. A good credit score can open the door to better loan and credit card rates, lower insurance premiums, and even job opportunities. On the other hand, a low credit score can make it difficult to borrow money and can even impact your ability to rent an apartment or sign up for certain utilities. That is why it's important to understand the factors that go into your credit score and to work on building and maintaining a good credit score. There are several factors that go into determining your credit score, and they are weighted differently depending on the scoring model used. The most important factor is your payment history, which makes up 35% of your FICO score, the most widely used credit scoring model. This includes your track record of paying your bills on time, as well as any late payments, missed payments, or collections. The next most important factor is your credit utilization, or the amount of credit you're using compared to your credit limit, which accounts for 30% of your FICO score. It's generally recommended to keep your credit utilization below 30%, as higher balances can signal to lenders that you're relying too heavily on your credit. Other factors that can impact your credit score include the length of your credit history, that's 15%, the types of credit you have, that's 10%, and any new credit you've recently applied for, 10%. Your credit history, or the amount of time you've had credit accounts, can affect your score because it shows lenders how you've managed credit in the past. It's generally better to have a longer credit history, as long as you've managed your credit responsibly. The types of credit you have, such as mortgage, car loan, or credit card, can also affect your score. Having a mix of different types of credit, known as credit diversity, can be seen as a positive by lenders. Finally, applying for too much new credit in a short period of time can lower your score, as it can signal to lenders that you're taking on more credit than you can handle. Now that you understand the importance of credit scores and the factors that go into determining them, let's look at 5 simple steps you can take to build a strong credit score. If you're enjoying the content so far, make sure to hit that subscribe button to stay up to date on all our future videos. By subscribing, you'll be supporting our channel and helping us create even more great content. Now back to our topic. Step number 1. Pay your bills on time. Paying your bills on time is the most important factor in determining your credit score. Late payments, missed payments, and collections can all have a negative impact on your score. To make sure you pay on time, consider setting up automatic payments through your bank or credit card issuer. This way, you won't have to worry about remembering to make a payment. You can also use bill reminder apps, such as Mint or Bill Tracker, to send you alerts when a payment is due. Alternatively, you can use a calendar or task list app to schedule payment due dates. Step number 2. Keep your credit card balances low. Your credit utilization ratio, or the amount of credit you're using compared to your credit limit, is another important factor in determining your credit score. High balances can signal to lenders that you're relying too heavily on credit, which can lower your score. To lower your credit utilization ratio, try to pay off your balances in full each month. Or, if that's not possible, keep your balances as low as possible. One way to do this is to transfer your balances to credit cards with lower interest rates, or to pay off the highest interest cards first. You can also use a personal finance management app, such as Mint or Personal Capital, to track your spending and credit card balances. A credit card repayment calculator, such as the one offered by Bankrate, can help you determine the best repayment plans for your situation. Step 3. Don't apply for too much credit at once. Every time you apply for credit, the lender will do a hard inquiry on your credit report, which can temporarily lower your score. To minimize the number of hard inquiries on your report, avoid applying for too much credit at once. If you do need to apply for credit, consider alternative options such as personal loans or secured credit cards. These types of financing may not require a credit check or may have less of an impact on your score. You can use a credit score simulator, such as Credit Karma's Credit Simulator, to see how different credit actions will impact your score. A personal loan comparison tool, such as LendingTree, can help you find the best personal loan options. And a secured credit card search tool, such as creditcards.com, can help you find the best secured credit card for your needs. Step number 4. Monitor your credit report regularly. It's important to regularly check your credit report for errors and fraudulent activity. Your credit report contains information about your credit history, including your credit accounts, payment history, and any collections or bankruptcies. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year. You can request your report online at annualcreditreport.com. To make it easier to monitor your credit report, you can sign up for a credit report monitoring service, such as Credit Karma or Credit SESAME, which will alert you when there are changes to your report. You can also consider using an identity theft protection service, such as LifeLock or Identity Force, to help protect against fraud and identity theft. And finally, step number 5. Use credit wisely. Using credit responsibly is key to building and maintaining a good credit score. Some tips for responsible credit usage include not maxing out your credit cards, only taking on credit you can handle, and paying your bills on time. It's also a good idea to diversify your credit by having a mix of different types of credit, such as a mortgage, a car loan, and a credit card. This can help show lenders that you're able to manage different types of credit responsibly. A personal finance management app such as Mint or Personal Capital can help you track your spending and credit card balances. A credit card rewards comparison tool such as creditcards.com or NerdWallet can help you find the best credit card for your spending habits. If you need additional help managing your credit and finances, a financial planner or advisor can provide guidance and create a budget and credit plan that works for you. Thank you for watching our video on how to build a solid credit score. We hope you found the tips and strategies we shared to be valuable in improving your credit worthiness and securing a strong credit score. Building a good credit score requires dedication and discipline, but the long-term benefits are well worth it. Please subscribe and like for more finance and lifestyle success tips and tricks. And don't forget to share this video with your friends and family. See you on the next one.